There's a lot of information on the internet about the different insolvency options, but it's sometimes difficult to sort of piece them all together. So I'm going to chat to you about the options that are available to a company, the corporate insolvency options. Now, if you're an individual who's in financial trouble, you need to go across to the video on the personal insolvency options because they're slightly different. If it's a trust that you're talking about, then you need to establish who the trustee is. Is the trustee a company, this video, or is the company an individual? Then you go to the personal insolvency options. There are three corporate insolvency options. I would like to call them option 1, the repayment arrangement, option 2, the formal arrangements, and option 3, the insolvency or liquidation. So the repayment arrangements is simply just that. You going to a creditor and saying, look, I can't pay you now, can I pay you tomorrow or over a period of time? They're great when you've got a small number of creditors, say 3 to 5, because you can imagine that that's pretty manageable. The more you get in number, so like 20 creditors, that's a lot of balls in the air, a lot of repayment arrangements you've got to keep, and if one falls over, then that could sort of be problematic. Now, you don't need anybody to assist you with that. You can just do them yourself. If you're going to the tax office, sometimes people use their accountant to do that. They're good because it's not public. It's just you and the creditor that know about it. However, the expectation under the repayment arrangement is that you're going to pay the whole debt in full, and that would include any interest, or if it's a tax office, any penalties as well. Option 2, the formal arrangement, is just that. It's a formal arrangement. You're required to do it through someone with the relevant license like us, and the law sets out how the whole process will work. If you're looking into them, they're technically called the small business restructure or the voluntary administration. They're great when you've got a large number of creditors because it all comes down to one payment through one person, the practitioner that you use, okay? And it's all done through a vote of the creditors. So you could technically get some creditors outvoting other creditors. If there's a downside, it's relatively public in terms of it's not advertised in any of the local papers, but it appears on the company's record at the Australian Securities and Investments Commission, and it's advertised on the ASIC's Gazette. However, the upside is that you can strike a deal that sees you not pay all of the money that's owed to creditors. So you might do a deal where you're only paying 20 cents, 30 cents, even 50 cents in the dollar, okay? So interest and penalties don't come into it because you just strike a deal where it's just one payment, and that payment can be over a period of time or it could be a lump sum payment. And option 3 is insolvency. It's liquidation. It's the end of the life of the company. The liquidator's role is to review the company's records to find out why it got into this position, do an investigation to see if there's any transaction the company entered into that perhaps could be overturned to get more money back in, and realise the assets of the company. So sell the plant and equipment, close the bank account, collect the debtors. That could be done as trading it as a going concern, so you could sell the whole business, or it could be a breakup of them and maybe items are sold at auction. So those are the three options: repayment arrangement, formal arrangements, or insolvency. Hope that clears things up for you.